What do you mean you trade like a lowly human? Seriously, we need to talk. Go ahead, leave money on the table. Trading like a human can really hold you back and cost you as well. 80% of all trading volume is driven by automated trading algorithms and electronic trading, including HFT, better known as high frequency trading. You know, your broker is selling you out. Did you know that there's very few, probably only 3 direct access market brokers that will not sell your order flow to HFT? Check it out at elitetrader.com. So ask yourself this: why give thousands you earn or save to trading educators or mentors so they can be going on some fancy vacation at your expense or buying Ferraris that you realistically will never have? Let's talk about a few of them. Anton Krell and his Institute Trade Waste. For instance, I've taken the course. Why waste 3 hours outside of trading hours to recalibrate some idea watch list? I've got an automated trading script that alone can accomplish the same task in 3 minutes. How will this extra credential that you need to have to be hired by hedge funds who are only interested in quant researchers or quant developers? Banks today are going through a higher turnover of human traders than ever. In fact, fewer are being hired today than a few years ago. It is much harder to get a job. For example, you need an Ivy League PhD as well as most likely a CFA to have the privilege to have your resume considered. After thousands that you spend, how does an unknown credential from the Institute Trade of Trading and Portfolio Manager extra mentoring help your career? As an indie trader, how much money is being managed by this firm? Why follow them when you can follow truly accredited indie hedge fund managers for free, like Dr. Ernie Chan, who manages millions? In summary, these old caveman fossil methods are useless today in the electronic world of high-speed automated trading based on algorithms. What the F? Seriously, Tim Sykes. Penny stocks? Really? Why follow the bottom feed or parasitic area of penny stocks? They're not taken seriously by any trader, career-minded hedge fund or banker. When was the last time you saw Bloomberg TV ever talk about the latest penny stock opportunity? In summary, you're trading rubbish and garbage for foolish people who are looking for gold that does not exist. But wait, then there's the CQF and the Fitch Learning folks. Why do they send us cease and desist lawyer letters? Why do they send copyright violation takedown requests to Google to shut down our popular YouTube channel? Are they competitively threatened by what we offer? Why does Anton Krell threaten physical harm to us? His stratospheric, expensive, inferior education is threatened by our 1/10 of our offering to learn, to automate, innovate, optimize, to unleash your profit potential, to join the world's most lucrative, profitable, and yet third-party, underline here, verified trading community. We don't stop and will not stop. These companies try to shut us down. They can't, as there is a will to showcase the world's most advanced methodologies to automate, the world's best trading technology to innovate your trading ideas for rapid implementation, to unleash your profit potential. Now here's some facts on how quant and high-frequency trading are the DNA of the top 5 highest paid hedge fund managers today. Number 5, Israel A. Englander. He made $900 million last year. Okay, check out that WSJ article. Number 4, who's a corporate raider? Bill Ackman. Number 3, Raymond Dalio, who made $1.1 billion, who's a quant guru. Check it out at the Forbes article right there. Okay, number 2, we know about him a lot. James H. Simmons, $1.2 billion. Hello, think Rentec, folks. And number 1, Kenneth C. Griffin, who earned $1.3 billion last year in 2014. Check it out at CNBC. And he's the CEO of Citadel. So, we also got one more little addendum from Zero Hedge. What they consider the holy grail of trading. This is all revolving around Virtu Financial. And just recently, the founder, Vincent Viola, became a billionaire courtesy of high-frequency trading. Check it out at the Globe and Mail. Now, so you're asking yourself, do you really want to waste thousands of dollars for profit potential from human traders? Now, this is what you really got to do. Shake your head real hard. Again, shake it again. Shake it one more time to let the cold, hard reality set in. Now, take a breath. Good. Now, let's move on to your next reality check. Trading like humans holds you back. As a human, how do you make $1 million? Well, we start at $2 million. 80% of all human traders will fail or lose money. Automated market makers are ready to pick off your trades today, and we call that sucker, okay? Now, you want to be part of a dumb money movement? Fine. You want to be a sheeple who gets slaughtered in the markets when they turn against you? This, of course, is your choice. This is what automation will give you. You scale to infinity. You have profit potential at exponential levels that no human trading educator or mentor will ever give you. How is that risk management working out for you when your wrong intuition or emotion doesn't work out for you? In a fast-moving market, how about the exact position weighting you should take on in your next trade, which could, of course, negatively impact your portfolio? How is that archaic broker working out for you with those pathetic, reports or primitive guesses that you take on because of that? So in summary, remove the human emotion since you have statistically a 50% chance of being wrong. Now, you can always rely on the pretty technical analysis charts. That probably won't save you. You can analyze any option chain or future set of contracts in real time for instant trading decisions. This is humanly not possible if you try to work against the trading machines. Past data is not to be used as a future indicator unless you have the proper technical infrastructure to implement it. Also, machine learning is a trend only to be implemented by PhDs. Otherwise, it's not recommended for use and is not proven to be any better than really trading a S&P 500 ETF. So, you also can do one last thing. Do market analysis, market depth analysis, deep market depth analysis instantly for multiple trading opportunities. And of course, you can always check our recent IQ Feed API presentation that we just recently had. Okay, so what do you do now? This is what you do not do. Depend on crutches of others. Chase after shiny toys that lead to nowhere. And always be involved, in the famous analysis by paralysis. So what is expected of you to take on the markets to unleash your max profit potential? You need to learn to innovate, be self-sufficient, and most of all, control your own destiny. You need to learn to not depend on other educators, not use limited cloud-based inferior trading platforms. You need to rapidly implement unique and innovative trading ideas that you create. Don't rely on other shoddy prop shops or other services who will, guarantee it, steal your intellectual property. So in summary, your future is in your hands for your long-term security. And maybe, just maybe, you may have a family that depends on those choices. So, welcome to our world. Welcome to the new philosophy in trading. You can join our community via YouTube, Facebook, Twitter, or Meetup. It's free. It only costs your time. We have weekly online meetup events, and most of all, our community helps to innovate, inspire, encourage, share, to optimize, to unleash your profit potential. So you need to ask yourself this: does your educator or mentor do any of this? Absolutely not. They are usually, most likely, selfish, egotistical, unresponsive, and uncooperative. They have no long-term interest in your trading potential. Even if they did, you would have to spend thousands of dollars to get it. So, welcome to the new world of automated trading. My name is Brian Downing, and I am going to approve this message from quantlabs.net.